last class. Okay, let's take a look at the chapter 13 material. So what I want to do first is I want to review the most important concepts that we discussed last time, and then we can work on the homework question together. So one moment as I pull up the chapter 13 notes. Okay. So here we have the chapter 13 notes. In chapter 13, as I mentioned before, there are two important concepts that you need to be aware of. And these important concepts include this idea of incremental analysis. So incremental analysis means that you are going to choose between two different options. Usually there's a status quo option, and then there's something that is different. Okay, what does that mean, status quo option? It means, for example, I'm already making something. I'm making my own bread. Should I go out and buy it instead? Right. With an incremental analysis scenario, you're looking at two options, which are mutually exclusive. Mutually exclusive means you can't do both. You have to pick either one or the other thing. We gave an example of different types of incremental analysis, types of decision making that you may engage in, and that's on page 7 from chapter 13 on page 3. So some examples of incremental analysis include making something or buying, right, selling something or keeping it, staying in school or dropping out, being late or being early. So if you have those types of decisions that you need to make, you know that you can't do both things. You have to either choose one or the other. So it's really a situation where it's either A or either B. When you engage in incremental analysis, you have to think about what's relevant and what's irrelevant. Relevant really has a lot of different things that go into it. In other words, if I'm deciding whether to make something or buy it, what are some things that I should concern myself with? What are some relevant things that I need to think about? Of course, things that you can control are relevant, because if you go with option A or option B, then maybe the cost will exist in one option and not in the other option. Opportunity cost is this idea of what you're giving up, right? So if you don't do something, if I go with option A and I don't go with option B, what am I giving up? Controllable and incremental essentially mean the same thing. Incremental means that there's a difference. You may have a cost or a revenue under one option, but not a different option. So that would also be something that's important. And then future, anything that is in the future is going to be relevant and something that you have to think about. So it's pretty easy to think about what is irrelevant, because irrelevant is basically the opposite of what's relevant, right? So if controllable costs are relevant, then non-controllable are irrelevant. If you have an opportunity cost, that means what are you giving up because you don't do something? A sunk cost is the opposite. A sunk cost has already happened. It's not going to change. Don't worry about it. This idea of something being the same and not changing is also terminology-wise called non-incremental or past costs. So relevant versus irrelevant. Let's take a look at a problem together, and let's see if we can figure out relevant versus irrelevant. Okay. So I'm going to put a problem on the screen. Okay, let's take a look at this problem here. Okay, so I know this is the first time you're seeing it, so we'll go ahead and read it together. We have two different cases here. We have case A and case B. And for each case, we have different items. And for the items, we have to put either relevant or irrelevant, important or not important. Okay, so relevant or irrelevant. Okay, so let's take a look at case A. We have a company that manufactures sailing yachts. The company has assembled the information shown below that pertains to two independent decision-making contexts. Right? So under case A, it says the company chronically has no idle capacity. No idle capacity means that they are 100% busy. So no idle capacity means that I cannot sell any units to you unless I take away units from anybody else, from somebody else. The document is not on, it's not posted, but let me send it to you in the chat right now, so you have a copy. Just give me 1 second. Okay, just 1 moment. Okay, so if you look in the chat, I'll send you the document there. Okay, so if you look in the chat, you can see the incremental analysis document. Okay, does it work for everybody? Okay, good. Okay, excellent. Okay, so let's go back to the problem. Okay, so it says we have this company under case A that has no idle capacity. That means that they're 100% busy. That means if you want to buy some units from me, the only way I can do that is to take away units that I'm trying to sell to somebody else. We have an old machine, B100. It says old machine model B100 is the company's constraint. Okay, let's keep reading and maybe we can get some more context. It says management is considering a model B300 machine to use in addition to the company's present model B100 machine. The old model B100 machine will continue to be used to capacity as before, with the new model B300 machine being used to expand production. So in other words, we have an old machine that we're using. We're going to buy a new machine. We know that the old machine is probably slower, but we're going to utilize both so that we can produce more. This will increase the company's production and sales because we have the old machine and also we have a new machine and we can use both at the same time. The increase in volume will be large enough to require increases in fixed selling expenses and general administrative overhead, but it's not going to affect your fixed manufacturing overhead. Okay, let's take a look and see for case A. We'll get our get a sense for how this problem works. Okay, so think about what's going on here. So basically we have old machine, which is the 100 model. We have a new machine, which is the 300 model. We're going to keep both. So it says, based on the information, indicate whether there is irrelevant, whether each thing is relevant or irrelevant. Okay, is sales revenue relevant? If you have both machines, I mean, I don't see why it would not be relevant. In other words, if I were to not buy the new machine or buy the new machine, is sales revenue, could it be different? Yeah. Is it something I have to think about? Sure. Can sales revenue change? Yeah. So another easy way to think about this is the item going to be different? Is sales revenue going to be different if I add a machine or don't add a machine? Of course, it's going to be different. That's important to think about. How much extra sales revenue might I have if I add a machine or not? How about direct materials? Will I need more materials if I add a machine or don't add a machine? I think that's relevant because I think adding another machine means I need more materials. So whether I add a machine or not, the amount of materials I need is going to be different. It's relevant. I need to consider it. Direct labor is also relevant because if I use a new machine or not, maybe I need to hire more people. So labor is something that could be different under each case. So that's relevant. Variable manufacturing overhead, I think it's going to be different. If I add a machine or don't add a machine, then the overhead is going to be different because it's variable. So it's relevant. Okay, so now we can go back and then say that for case A, what is the incremental analysis decision? It's add a new machine or not. Okay, so add a new machine or not. Okay, what about the depreciation on the old machine? This is the B100 is the old machine. Is that important? Is that going to be factoring into whether I add a machine or not? I don't think so. Because if I don't add a machine, I have to pay for depreciation on the old machine. If I add a new machine, it says you're going to keep the old machine anyways, then you still have to pay the depreciation on the old machine. This is something that's irrelevant. It says in the problem, we're going to keep both machines. What about the book value? Is that going to be relevant or irrelevant? Okay, so the decision is, should I add a machine or not? Well, the book value of the old machine is going to be the same and it's not going to change because if I add a machine, I still have the book value on the old machine. If I don't add a new machine, I still have the book value on the old machine. This is irrelevant. All right. What about the disposal value? Like if I were to sell the old machine, well, the value, if I were to sell it, is not going to change if I add a new machine or don't. It's the same. It's irrelevant. What about the market value, the cost of the new machine? If I don't add a new machine, I don't have to buy the Model B300. If I add a new machine, then I have to worry about how much it costs to add Model B300. This is relevant. That's relevant. All right. What about the fixed manufacturing overhead? It says that in this problem, things will change, but not the fixed manufacturing overhead. It's going to be the same. Okay, so somebody put in the chat, it's irrelevant. Okay. What about variable selling expense? It says that your fixed selling expense and general administrative overhead is going to change if you add a machine or not. But what about the variable selling expense? Variable means if you have more, then you have a different cost. This is relevant. Okay. Here's the answer already. It already said in the problem, for fixed selling expense, it's going to change whether you add a new machine or don't add a new machine, it can be a different amount, right? And same thing with the general administrative overhead. This is also relevant. Okay, so this problem had a lot of different things. This is from the book, and some people like to say the book likes to trick you sometimes, maybe, or makes it confusing. How do you do a problem like this? Before we go over that, are there any questions on any of the letters? Can I explain anything again? Like, can you explain B or C? If so, can you type in the chat? Or Molly, you have your hand up.
Yes, can you explain again the depreciation?
Yes. Okay, so first step, think about what is our decision? Either add new machine or don't add new machine. We're gonna keep the old machine. The old machine has already depreciated. So let's pretend that the old machine depreciated $100. Molly, how much is the depreciation if I don't buy anything new? How much depreciation did I already pay?
The old machine's price, the price of the old machines.
Which is $100.
Yes.
If I buy a new machine, how much did I already pay for depreciation on the old machine? Yeah, so whether you buy a new machine or not, you already spent $100 for depreciation. That's a sunk cost.
Yes.
It's irrelevant.
Okay, thank you. Now I get it.
Okay, no problem. How about the case, should I break up with my partner or not? I already spent 5 years. I already spent 5 years in the relationship. That's an irrelevant cost. It already happened. Whether you stay with the person or break up with the person, those 5 years are already something you can't change. It's already there. Okay, does that make sense, everybody? Can you give me a thumbs up if that's okay so far? Only 2 people? 3 people? Okay, all right, I'll take that. Yes, we have a question. Rugatore? Oh, okay, the hand went down. Okay, all right. So when you do this type of problem, what are the steps that you're going to take? You're going to say, what is the decision that needs to be made? Right? So you can maybe make something, you can buy something, right? Anything that's different, like if you make something, I pay $0. If I buy something, I pay $100. Anything that's different is relevant. If I make something, I have to spend $100 for rent. If I buy something, I have to spend $100 for rent. Anything that is the same is irrelevant. It doesn't matter. You shouldn't think about it or worry about it. Okay, good. All right, let's take a look at one more here. Machine B100 and B300. We have the old and new machine. Case B says the old machine is not the company's constraint, but management is considering replacing it with the new B300 machine because of the potential savings in direct materials with the new machine. Maybe the new machine is more efficient and it doesn't waste ink or something. I don't know. It says the model B100 machine would be sold. Okay. This change would have no effect on production or sales other than some savings in direct materials costs due to less waste. Okay. In case B, I wish they would just call it old machine. That would make life much easier, right? Old machine and new machine. It's really not important that it's called model B100 or whatever. So you have old machine, new machine. And The company now is thinking, should I get rid of the old machine or should I keep the old machine? Here, the decision is different. Should you buy or should you keep old machine or buy new machine? Okay. I think people have these decisions all the time. Should I keep my old car or should I buy a new car? And you're not going to be able to keep both because you're either going to use the old machine or the new machine. Let's see what happens now. Okay, sales revenue. Okay, I don't think you're going to get any extra sales revenue if you have the new machine or the old machine. You're going to have the same sales revenue. The reason why I know that is because it says the machine is not the company's constraint. In other words, that's a fancy way of saying that the machine is I'm going to use the machine to make 100 units. Whether I'm using the old machine or the new machine doesn't matter. It says in the problem, there's no idle capacity. In other words, I'm already selling everything I can make. So am I going to use the old machine or the new machine to make it? That's the question. So is the sales revenue going to change if I use the old machine? Or is it going to be different if I use the new machine? I don't think so. It says that those are going to be the same. So this is irrelevant. It says that the new machine is more efficient, so it uses less material. So is there a difference in material, direct material cost, old machine versus new machine? Yeah, there's a difference. So it's relevant. Okay. It says everything else is the same, right? So the direct labor is irrelevant because it's the same. Variable manufacturing overhead is irrelevant because it's the same. It says in the problem, everything else is pretty much the same. What about like the old machine? I already depreciated it like 5 years at $10,000 a year. Is that important or not important? Can you type in the chat? What do you think? I already spent $10,000. I already have $10,000 in depreciation. Is that relevant or irrelevant when I go out to buy a new machine? It's irrelevant because it already happened. Too late, right? So that's irrelevant. Okay. What about the book value of the old machine? Well, I mean, is the book value going to change if I use the old machine or a new machine? I mean, I think it is what it is, right? This is irrelevant. One of the things that a lot of people say is, oh, it is what it is. That means whether I do X or Y, same thing. I'm not going to be able to change it. The book value, I mean, on my books, the machine is worth so much. I mean, it's not going to change if I buy a new machine or keep the old machine, right? Now, that's kind of confusing because the disposal value is going to be relevant. Can anybody type in the chat why they think the disposal value is relevant? That's also salvage value. Why is it important what I can sell the old machine for? Why is that important? Can anybody type in the chat? Yes, because when we sell it, very good. If we sell it, if we get a new machine, we can sell the old one and get some cash out of it, right? So if you don't sell the old machine, you're not going to get the disposal value. If you sell and get a new machine, you will get the disposal value. The book value just means what it is on our books. I mean, that's not going to change. It is what it is. Disposal value, you will either get the money or not get the money. Okay. What about the cost of the new machine? Is that relevant? I mean, I could ask the question differently. Do you want to buy a new car or not? Is the cost of the new car important to think about? Yeah, because if I buy a new car, I have to pay the price. If I don't buy the car, then I don't have to pay. So whether, depending on what I do, it's either there or it's not. It's relevant. Good, relevant. What about fixed manufacturing overhead? It doesn't change. For example, I have to pay rent or something. Let's pretend. If I use an old machine or a new machine, it's the same. This is irrelevant. It's irrelevant. All the other stuff, it says it doesn't change. So that means these would all be irrelevant. Okay. Okay, good. All right, so think about, is it going to change or not? That's how you know if it's relevant or irrelevant. Okay, good. Does anybody have any questions? Okay, all right. Okay, if you don't have any questions, then let's go back to the notes. And let's talk about static and flexible budgets. Let me pull it up. Okay. Okay, can somebody tell me in the chat, what is the difference between a static budget and a flexible budget? What is a static and a flexible budget? Why are they important? Does anybody want to type in the chat what they think? Okay, good. Li Cheng, static is the original budget. Very good. What else do you all think? Maybe you can tell me what a flexible budget is. Static budget is created for one activity, while flexible is for more than one activity. Good, Madison. Very good. Why not just use the static budget, everybody? Anybody have any ideas? Why not just have only a static budget? I mean, what's the point of a flexible budget? Anybody know? Because it is important to diversify to limit risk. Yeah, that's partly true. Yeah. So we have a static budget. That's the first budget that I make. And then when I figure out how much I actually have, then you can update the budget and make it a flexible budget. Prices may be variable. Very good. Let's take a look at the example that we did last time. Okay, so here we said that we want to go to Hawaii for 7 days. So we make an original budget. This is called the static budget. I made a budget for 7 days. Okay, this is my first original budget. It's at one level of activity, 7 days. I actually go on vacation for 10 days, right? The reason why this is crossed out is because you cannot compare a 7-day vacation budget to a 10-day vacation because it's not even the same number of days, right? So I have my actual results here, 10 days. And what I do to make the comparison more reasonable is I take the static budget and I change it, right? I make it flexible and I update it to figure out, well, okay, you actually went on vacation for 10 days. How much is a 10-day vacation supposed to cost? We make a flexible budget. Then you can compare what actually happened on a 10-day vacation to what you think is going to happen on a 10-day vacation. Okay, good. All right, any questions on that? Okay, the homework for chapter 13 is very easy because it's the same problem that we did in class. Okay, so when you do it, you can try to do it without your notes and try to think through the process of why the answer would be relevant or irrelevant. Okay, anybody have any questions about anything from this chapter? Okay. All right, the last thing we're going to do is I want to introduce the project to you, which is not that bad. Okay, so when people hear the word project, they think, oh my gosh, this is going to take me like a month. I would say the project, if you sit down for 2-3 hours, I think you should be able to finish it. I'm going to introduce the project for you with you now and show you where it is and also generally what I'm looking for. And then on Friday, after you take a look at the project, I'd like to have like a workshop where we can go over a little bit more about the project and answer questions that you might have. Okay. All right, so first, what I'm going to do is I want to share with you my internet connection, like all the pages I have open. That's a better way to say it. Okay, all right, so you can see my screen here. All right, so if I go to courses, okay, so I'm taking a bunch of courses. I'm taking 241 and so are you. Okay, we go to assignments. And then we have our experiential project due April 29th. This is the last day of the semester. This is where we're going to have our last exam. So I have the deadline as late as possible. There's no reason why maybe you can't finish it by this Sunday, maybe, because we're going to talk about it today, do a workshop on it on Friday. You could probably finish it over the weekend if you want and upload it anytime you like, because project is here and you can upload it. You have 2 chances to upload it. The reason for that is sometimes people upload the wrong file. Like somebody uploaded like their a letter they wrote to somebody instead of the project. So if that happens, then you can re-upload the correct file. Okay. So let me download the project and then let's look at it together and I can introduce it to you. Okay. There's always a reason for the madness in the sense that this project is really something you can do right after chapter 13. All right, so here's the project. Okay, so I'll just give you a summary and overview. You can read everything yourself. Okay, so we have green pastures. This is a farm. Okay, so this farm has a master budget. Okay, master budget is another word for static budget. Okay, so they think that they're going to be taking care of 60 mares. Mare is like a horse, I guess. So they think they're going to be taking care of 60 horses. This is a farm where they take care of horses and they have a veterinarian. They feed the horses. They board the horses. It's like a horse hotel, right? So their static budget is for 60 horses. Okay, this is a master budget, but actually they only took care of 52 horses, right? What you need to do in this project is you need to create a report, a flexible budget report What does that mean? Flexible budget report? That means figure out the different costs that they have. Figure out what the budget is, what the actual is, what the variance is, and you're going to provide some type of explanation. So that's where this project part comes in, because your explanation can be whatever you think based on what you learned in the class. Okay. So budget, actual, explanation. I'm sorry, budget, actual, variance, and explanation. Okay, so I have a question. Okay. Why can't I just look at this? I mean, didn't they already do the work for me? I mean, look at this, for example. Veterinary fees. I thought it was supposed to be 65,700. It's actually 58,838. There's a $62 variance favorable. Looks like they did all the work for me. Why isn't this the answer? What's wrong with this? And this is the whole point of the project. Can anybody tell me what's wrong with just comparing the master static budget against the actual? I mean, I don't see any problem, do you? Maybe there is a problem. Can somebody type in the chat what the problem is? Why can't I just compare the master budget? Okay, this is called the static budget against the actual results. Because it's not the same number of horses. Exactly. That's exactly right. So one more time, everybody. Remember last time we talked about a trip to Hawaii? Our static budget was 7 days on vacation. We actually spent 10 days. You have to update these static numbers. And then we can compare the actual and the flexible budget against each other. Okay. And that's what you're going to do with this project. So the instructions say, based on the static budget report, in other words, just looking at the information, what was the reason why there was a decline in net income? I mean, I think there could be a lot of reasons, right? This is really your opinion. I mean, you can speculate and make an argument for whatever you think. Did management do a good, average, or poor job at controlling costs? That's your opinion. Were management's decisions to stay competitive sound, right? Prepare a flexible budget report. Well, that's what we're going to do here, right? You're going to update the static budget and create an actual result and compare it against the flexible budget result. Okay. And what do you recommend that Green Pastures does? Okay, so this is an overview of the project. Any questions on this so far? This class is always full of questions. Molly, you have a question? Yes.
Yes, can we just put it into the Excel sheet and
Yeah.
then just can like copy paste in the Word document?
Yeah, I think that's an outstanding idea. I mean, don't create more work for yourself. You can use Excel and then copy and paste, use formulas if you like.
Yeah,
right?
yeah.
So when you submit your work, you can upload. It would be nice if you can